think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. We talk all things macro, and we talk about how these macro topics actually affect our investments, affect our money, affect our wealth, our finances, our lives, our freedoms, all those things. And so today we got a crypto expert coming on, Miss Wendy O. How are you doing today?
I am doing amazing. Thank you so much for having me.
Yeah, I appreciate you taking the time to come on. So you're actually the second Wendy that I've had on my channel.
Nice.
So have you ever heard of Wendy Day?
I don't want to say yes, but I might have. I don't know.
She is a absolute titan. So she actually was really good friends with Tupac. She negotiated a lot of hip hop deals, including like Eminem's deal, Cash Money's deal, and a lot of some of our favorite hip hop artists, growing up. So did she
negotiate a deal for Sugar Free? Because that's my favorite rapper.
Sugar Free? I'm not sure.
Kidding. Probably not.
Sugar Free be come with that pimp stuff. He be
yeah. Because I've got people out in Pomona, and So but he's one of my favorite rappers because you always have to represent the West Coast. You have to represent, where you grew up around. But no, I actually thought you were talking about somebody else. I feel like I know another Wendy that's in the financial industry. So I was like, maybe I know her, but I don't know anyone on that side of the entertainment industry. But that's amazing. You're able to get her to come on and to chat with you. That's some alpha right there.
Yeah. So she's amazing. So I just wanted to start by just giving my audience just some of your background, how you got into crypto and everything. I mean, I know you talk about, some aspects of your life on Twitter, and you're very transparent, and stuff. And I really appreciate that because you're not like cookie cutter, financial person,
Nope.
So what's some of your background and what led you to crypto?
So I grew up super poor. When I was 7 years old, my mom divorced my dad, and my dad ended up passing away when I was 11. So I grew up in a one bedroom of a 2-bedroom townhome. It was my mom and my 3 sisters, or my mom, my 2 sisters, and I. And we all were in the same room until I was 18. And I didn't grow up in a really nice part of town where we lived. We lived in a nice city, but I didn't live in a nice part of town. And I saw a lot of stuff growing up. And that's partially why I am the person that I am and the way I present myself the way that I do, because a lot of people everybody in the financial industry, they all have all these MBAs, they have all these degrees. And again, no hate at anybody with a degree, but at the same time, I feel like some people, they feel so much better than other people just because they have a specific type of degree. And I don't rock with that. I'm not comfortable with that. I don't think that's okay. I feel like with finance, there's such a like a class issue, or I don't even want to say a class issue. It's more like a wealth issue. Like they feel like, oh, I work in finance, I have money, like I'm better and smarter than you. When in reality, we don't even teach personal finance in public school. So it just makes all these issues. So what you see with me and what I say is what you get. Like I'm not a different person off of the internet. What you see is what you get. And I got into crypto end of 2017. I started doing it full time in 2018. And my whole mission is just to create content and just to be a regular person, a mom, just your average, person that's making content, talking about things I'm passionate about, and reminding people you're smart enough to do this stuff. You're smart enough to learn about finance. You're smart enough to learn about crypto. You're smart enough to get yourself out of debt. You're smart enough to create generational wealth, to break generational curses. You just have to put some additional effort in. Some of us have to work harder than other people. But at the same time, I feel like we all do have our own journey we have to go on. And some of us have to work. We have to move a little bit differently to get to where we want to be. And that's okay.
Yeah, for sure. That's interesting you said that. That's when I got in crypto. It was about 2017. I didn't know what the hell I was doing. I was just
nobody did.
I was putting money in TRX and, making gains and and then when we saw that crash, I was out. I didn't touch it ever since. But you stayed in it, so you actually took the time to do your due diligence and learn it and everything. So, what are some of your favorite cryptos? I want to know that because I know you're a trader. I know you do a lot of trading, but I'm like, does Wendy hold any long term? Because on my channel, we talk a lot about macro. We talk a lot about just being able to build wealth and see geopolitics and how they affect finance and stuff. But you did a lot into the micro, looking at the charts and stuff, which I'm learning. And I'm actually subscribed to the Crypto Nights?
Oh, nice.
Crypto
Good.
Nights.
Yeah. Crypto Weatherman he's really good. Like he's an amazing trader. He's such a better trader than I am. I just do like general stuff because I don't want to ever give signals, as that's not what I do. Like I like to talk about things that are interest me and I'm excited about. And I mean, as far as my crypto holdings, one of the things I have to make very, very clear, very, very clear. I will hold things long term, but I also take profits very aggressively. I do this thing, it's called a moonbag strategy. It's when it means you have your disposable income, you've researched a project, you've researched an idea, it resonates with you, it makes sense with you. Then after you've done your due diligence, you come up with a trading or investing plan. You create a bullish scenario and a bearish scenario. And this is why technical analysis does matter. It is important just to have the basics. And, obviously everybody wants number to go up. So if in fact number does go up, you have areas where you're taking profit and you're working on investing in an asset. And then once your targets get hit, you remove your initial investment, you remove some profit. So whatever you have left over, you own free and clear. It's essentially house money. And obviously if the market turns and a bearish scenario happens, you have your stop loss. You have how much you're willing to lose, like maybe 10%. Maybe you want to hold to 80% down because it's crypto, who knows? But I think that's important for me to start with that first, is that I'm very aggressive with my stuff. Some of my favorite projects, like I've got Bitcoin, and I also utilize a lot of stable coins because I can earn passive income on these stable coins. Mm-hmm. I mean, there's still ways to do that. There's risk associated, not your keys, not your coins, but that's something that I do. I've hold Ethereum. Probably one of the top projects I hold, and again, not financial advice, is Gala, because I really love what they're doing as far as Web3, metaverse, play to earn, NFTs for music, all of that type of stuff. Matic is a layer 2 solution, and a couple other stuff, but those are generally my biggest holdings. And I talk about it all the time on the show.
Yeah, for sure. And we're going to definitely put your channel up here on the screen and in the description. So like for me, the way I look at it is like I'm long-term bearish the dollar. And so, okay. I know that, and I am a gold bug. I mine Bitcoin too. I'm balanced in that perspective. I follow Lynn Alden quite a bit. She's one of my favorites. She came on last year, but so I've been learning a lot about Bitcoin. I currently mine Bitcoin through Compass Mining,
nice.
just as and stuff. And so it's something that's easy for me to do, but like there's so many projects with mm-hmm. crypto. There's so many things. You got NFTs, you got Web3, you got, I'm sure and it's almost like a full-time job.
It is. That's why I do this full time. But I also too, just so the audience knows, like I have a full team behind me. Just because I've been doing this for so long, I've been able to grow my network. And one of the things that I want to remind your audience, if you're watching this as brand new to you, you're like, what the heck is this lady talking about? What is he talking? What is Daryl talking about? What's going on here? Like one of the things that's very, very important is your network. A lot of people don't understand that you can invest in yourself. And by investing in yourself, you would invest in your network. And that is just taking time out of your day, either to spend 10 minutes to self-educate yourself about different things people are saying and come up with your own opinions. Also too, go to events, go to meetup.com, go to events or go to free events, meetups that are based around ideas that you like or things that you're interested in. Learn, go on social media, join groups, join Telegram, Discord, whatever it is, but you have to put yourself out there, because when you're investing, you have to understand the United States government has made it very hard for the average American to invest. Yes, you can go ahead and you can do a 401k or an IRA. But when I talk about it making it hard for us to invest, we don't learn about personal finance in school. We don't. I don't remember learning it. So you have to take the responsibility on yourself to learn what is an APY, what is an interest rate, what is debt, what are all these things. So one of the things you should do is just start putting that, start networking and doing that. And then as far as diversifying, the safest way to invest, in my personal opinion, is to use disposable income and to start dollar cost averaging with Bitcoin, because that's the OG coin. If you want, you can start putting money into stable coins and find centralized platforms that are reputable, that a lot of people are using, and leave them there to get passive income. Ethereum is a great project because it's a tool to be built on top of. And another thing, just because somebody's talking about a project, you don't have to dump money into it. Like it might be better for you to just dollar cost $10 a week in Bitcoin or $5 a week in Bitcoin or whatever works for you with disposable income, but start educating yourself on all these other things. Because maybe you start self-educating and you're like, oh, altcoins, those are great. Or great. And then you want to put money into those and have a plan. Or you're like, I don't like these. This doesn't make sense. I'm okay with Bitcoin or gold or whatever it is. So keep that in mind too. You don't have to take every trade. You don't have to take every investment.
Mm-hmm. Yeah, for sure. I'm into a few altcoins. Like I did a couple videos on Web3. I had Mark Yusko on last year.
Nice.
He kind of educated us on some of the Web3 things. And yeah, right now I'm like, I sold my altcoins. I was like, I just don't know what's going to happen, if I can get in at a better price at some point, because of just like what's happening with the Fed, the liquidity drying up, the tightening. The economy just does not look healthy right now. And so I'm just like, what's this going to look like in the near term? And so what's your take on
altcoins are super risky. Altcoins are very, very risky. Most altcoins are going to go to zero. They're going to dump 80, 90%. Some of them are going to go away. And the reason why is because we still don't have clear regulation ideas for crypto because of the SEC and IRS is part of it too. All of these public servants, they can't really, they're not really able to tell us what we can and can't do. They want us to pay taxes on it, but then they can't decide what is a security and what is not a security. So when you're investing in altcoins, when you're investing in coins beside Ethereum, Bitcoin, and stable coins, USDC, I'm going to throw that in there. It's important to note. But when you're investing in these projects, you're investing in small startups. You're giving strangers your money. I don't know about you, but if a stranger walks up to me on the street, I'm not giving them my money. If I sit and for example, I'm not giving them my money, but let's say a homeless person walks up to you. And I'm going to use this example because when I worked in healthcare, I dealt with a big homeless population. The first time I would meet somebody that, I can tell had some, was out on the streets or whatever, and they asked me for money or they asked me to do a special thing for them at my job when I was in healthcare. I would do my basic job, but a lot of times I went above and beyond for them. But the first time they came in and they started demanding all these things and wanted from me, I was like, no. I'm going to give you the basic respect and that's that. But then as we would get to know them, they would come in over and over again. Sometimes I would bring them food or do other things. So when you're thinking about putting money into altcoins, you're giving strangers your money on a promise that they're going to do something with it. You're not going to let anybody come up to you off of the street and take your money. So why would you give your money to somebody that you don't know? So when you want to invest in altcoins, you have to do a lot of research and you also have to take on the risk. There's a 50% chance this thing is going to do well, and there's a 50% chance it's not going to do well. And that's just the first initial risk. Then you have to look at, okay, is this project going to hold up in the bear market? Probably not. If you look at Bitcoin's historic price action, we've dropped 80% every single cycle. So when you're putting money into this stuff, you have to have a trading or investing plan. You can't put money in and hold on to this stuff for 5 years. It generally doesn't work out unless it's Bitcoin or Ethereum.
Yeah, that's funny you mentioned that. When I went, I just walked to the little 7-Eleven across it. I still go to 7-Eleven here and there.
I do too. They have the most unhealthy, but the best tasting, like cheap pastry.
Yeah.
Like their
Yeah,
donuts
sure.
or their talking.
Yeah. So it's a big homeless population here near my office. And it was older African American guy. He was trying to buy a beer and he was like 50 cents short. And I was like, man, just give me your $6, man. I got you, man. Let's take care of this. So I did give him some free money, but sometimes you just feel generous sometimes.
Right, but at the same time, you helped him out a little bit. You didn't give him your entire. You didn't say, here's $500 that's in my wallet. Take it.
Yeah. Exactly.
That's what people do. People will literally give strangers money on the internet and expect for it to increase, which I get it. Everybody wants to do well, but at the same time, you have to separate the two.
Mm-hmm. Yeah. I know. I'm just messing with you, but that's important why you do your due diligence and everything. And so, yeah, I took my money out of altcoins. I was just like, yeah, I think that some of these coins are may be around for the future. I mean, they have raised a lot of capital, like mostly like Polkadot. I was in Polkadot, Link, Filecoin, Solana, and a few others. But, I was just like, yeah, I think these coins are probably going to get demolished at some point and I can get in at a way cheaper price.
Mm-hmm.
Yeah.
I agree.
So what's happening with the regulation? I saw the whole thing, you did with about Celsius, and I saw that they implemented this regulation where you had to be an accredited investor, which accredited investor you have to have 250,000 or something like that, something crazy.
Mm-hmm.
And I just saw that video, and you were just like sick to your stomach just about it.
I was upset because it's terrible. So basically, the public, and I call them public servants because they're literally on payroll to serve all of Americans, like people, like everybody, regardless of who you are, your gender, your skin color, your background, your wealth. Public servants, people we are voting into office, are supposed to support us. They're supposed to help us. But realistically, they made it so that only accredited investors can earn passive income on Celsius. So Celsius had a really dope program to where you buy stable coins or you buy crypto, you put it there, and you can earn up to like 14% back. Your bank pays you 0.03% on your savings account. Your bank takes your money and loans it out to people and profits off of you. But they're basically saying that buying a stable coin, which is pegged 1-to-1 by the US dollar, buying Bitcoin, and then putting it on a centralized exchange to earn passive income is dangerous.
Yeah.
It's not dangerous.
Wow. Mm-hmm. Yeah. That's crazy. Just how corrupt our officials are and everything. Our public servants are. So, with my perspective, like the dollar, I'm bearish on the dollar. The dollar is obviously the medium of exchange that we use to, pay our rents and everything like that. What's your long-term outlook on, crypto, Bitcoin being a medium of exchange or whatnot? Because I know, like, you take your profits and I'm sure you use that cash. Like, I believe you're about to go buy a house or something, or you're moving or something like that. But what's your long-term take on the dollar and crypto?
So as far as the dollar goes, I believe we printed over 80% of dollars in the last 2 years or something ridiculous like that. It's scary. It's really, really scary because our people, our public servants, keep spending money. And I get it. You have to spend money on things. But at the same time, why are we spending money on things and not balancing the budget, or at least saying, we have this program from all the way from 1942, nobody's using anymore. Why are we funding this organization? Stuff like that. Like, you want to make sure that when you're spending money, that you're getting return on your money. Like, if I'm going to send you money, like, let's say, for example, you're like, Wendy, can you send me $20? I'm going to go buy tacos. I'm like, okay, great. I'm going to send you $20 so you could buy tacos. But you take that $20 and then you go buy pizza. So, that money was supposed to be for you to buy tacos, not to buy pizza. So the fact that you went and you took the money to buy pizza, that's not doing what, the money is not going to where it's supposed to be. And I know that's a really ridiculous example, but that's what the United States government is doing, is they're not spending the money where it's supposed to go. So I'm bearish on the dollar, but I'm also scared. I am bullish on Bitcoin and I am bullish on other cryptocurrencies, but I'm also nervous about those too, because Bitcoin was created at a 2008 when we had the housing crash, and it was a really terrible time for people. And we're using this, it's kind of like experimental technology. Like, even though it has been proven to be immutable and to do all these great things, but it's still experimental on adoption and how people will use it. So it does make me like, I am bullish on Bitcoin, but at the same time, I'm not going to sit here and be like, buy Bitcoin now, and tell your audience that, instead of coming off with a realistic approach, because there may be people that are living paycheck to paycheck and okay, well, I'll dump all my money in Bitcoin, I'm going to be safe. No, you don't want to do that, because you might not be safe. It's not, there's different ways to do things for different people.
Yeah. And that's the reason why diversification is important. So me, I'm in Bitcoin, I'm in sports cards. I just started getting into that. It's addicting. I need to stop that. I need to slow down on that one. But sports cards, rookie LeBron James cards and stuff like that. And then I'm also in, gold stocks and, a few other things, a little bit of cash, for you're going to need it at some point. So going into NFTs. So I'm into sports cards. I started trying to, look at NFTs, and then I was learning from, I think it's Joshua from Crypto Nights.
Mm-hmm. Him and Rudo are super good. They're very good at it. Super good.
Yeah, I believe he's starting a podcast too. So I may need to have him come on and educate us or something. So I was listening to them, and they were talking about how they're in and out of the NFT market. It's not like I'm buying this and I'm holding this for, 20 years to come? Like,
no, with
what's your take?
NFTs. So this is the thing with NFTs, the underlying technology behind NFTs is amazing. But a lot of the NFTs that we're seeing today are not doing that properly. A lot of them are cash grabs, or a lot of them have got ideas that they want to be this great thing for ownership and IP rights and whatever it is. But that's not the case. So one of the things that I do, it's the same thing I do with trading, because all of this stuff, it's just an idea. I will buy multiple NFTs. I will wait till number goes up. But then I also have a plan if number goes down and how much loss I'm willing to take. And then I sell enough of my NFTs, or sell my NFT at a specific price to where I hold one left over and I own it free and clear. And I call it a moonbag strategy for NFTs. I do the same thing there. And like, for example, I bought 2 mutant apes when the floor was like 4 ETH. Well, the floor is now 43 ETH. I bought one at 7 and one at 4 ETH. So what I did was I got the airdrop. I waited for the floor price to go up, and I sold one of the apes at 30 ETH. I got 28.5 ETH profit. And then I think after I subtracted how much I paid for both of the NFTs, I made a profit of 17 ETH for that. Wow. So, and like, even though if I would have held, the number would have still gone up and I missed out on a bunch of ETH, at the same time, I had a plan. I stuck to my plan. I wanted to practice positive and safe risk management, because what happens if the floor price went to 30 ETH, or what happens if the floor price went to 31 ETH and then it dumped? Mm-hmm. I can't guarantee that it's going to continue to go up.
Yeah. And for the audience, ETH is Ethereum. Yeah. Just so I can plug that in there for y'all. But that's amazing. So there's a good, bad, and ugly of NFTs. I mean, the whole thing with the Jack Dorsey tweet, that was like, I was like, oh wow, this is, it was crazy because I had talked to when I had Lynn Alden on a while ago. We talked about NFTs, and I mean, there's obviously the negative take on it. Oh, it's just a JPEG and stuff like that. But I don't know what made that guy think that was going to be valuable in the future, or what. I don't know what the heck that guy was thinking.
Yeah, stuff happens, things happen. And just as long as you're using disposable income and you have a bullish and a bearish plan, and you're willing to take responsible of your actions, have fun and invest in whatever you want. I support your decision, everybody's decision, but understand there's risks.
Yeah, for sure. So any advice for less advanced crypto investors? My audience, like, we go into crypto, but like, you're probably the biggest expert on crypto that we've had. So
to be honest, I'm a mom. I am a mom. That's it. I'm just a mom. I know you're a parent, and I know a lot of your audience, parents, aunties, uncles, grandparents, siblings, cousins, we're all human, and we're all good at things, and we're all bad at things. So the best piece of advice I can give you, take 10 minutes out of your day. And I know every single person watching this has 10 minutes out of their day. I don't care if you're on your work break. I don't care if it's 10 minutes before bedtime, you're doing your Netflix and chill, or your Hulu chill, whatever it is. Take 10 minutes and start researching. Read Satoshi's white paper, read my free newsletter, watch what Daryl's saying, join the Crypto Nights Discord. I don't care what you do. Take 10 minutes and start educating yourself. You just, like, once you start on your journey, you don't have to dump money in, just start educating yourself. There's a free website. It is called Investopedia.com. Investopedia.com, 100% free. They have different technical analysis articles. They will tell you what an ETF is, what is APY, what is Bitcoin, what is blockchain. It literally covers a lot of the crypto definitions and the traditional financial definitions. And if you sit and you read an article once a day for the next 30 days, you're going to be pretty well versed. And this is all like, this is free. All it's costing you is your time, opportunity time, but not at the same time, you're educating yourself on crypto, personal finance, and you're also training your brain to be able to understand. And it's just healthy for your brain anyways, to read and to use critical thinking.
Yeah, for sure. Well, Wendy, I appreciate you for coming on and giving us some of that game that we need to be able to navigate these murky waters, financial waters that we're in.
Well, Daryl, thank you so much for having me. And audience, thank you guys. Appreciate you watching. Make sure to like this video, subscribe, share, all that fun stuff, and sending y'all love and light.
All right. I'm gonna be sure to link your channel and your Twitter and everything here. So, all right, thank you.